The dollar's higher today as a result of flights of money coming into, I guess, U.S. dollar assets. The U.S. yields are lower. We're also seeing U.S. stocks higher. This comes after President Trump over the weekend said that he would not impose the 50% tariff that he just announced on Friday, or recommended, I should say, on Friday for the EU. So that will be delayed until July 9th, I think, is the date. So a month or so and a little bit more reprieve for the EU as far as working on a tariff deal with the US. We'll see how all this plays out, of course, and who knows what tomorrow might bring, or today for that matter. We are seeing yields lower. We're also seeing stocks move higher. The Dow Industrial Average up over 500 points. I think the Nasdaq's up over 300 points. The yield curve, the 2-year is interestingly right around 4%. The 10-year is interestingly right around 4.5%. And the 30-year is right around 5%. So 4%, 4.5%, 5% is a progression of the yield curve. That's a nice way, easy way of thinking about it. Let's talk about the technicals that are driving the three major currency pairs to kickstart your day. Here in the North American session, the euro versus US dollar, dollar versus yen, dollar versus US dollar. So let's get started. Enough of the fundamentals. Let's start by taking a look at the hourly chart of the euro versus US dollar and trading yesterday. The market initially moved to the upside with a lower dollar after the announcements over the weekend from the Trump about the tariffs. The price then rotated back to the downside, came back to the 61.8% retracement in this swing level right through here, right around the 1.1378 level. The level correspond roughly with swing highs right here, swing high right here, swing high right here, swing high right here. This is Friday's high. We broke above it and traded yesterday, and then came back down. We traded above and below it, but as you can see, in the North American session, again, U.S. traders were off, so what good is that? But we did see the buyers stall against that 61.8% retracement. That gave the Asian Pacific traders the go-ahead to try to push to the upside. We couldn't get above the high prices that we saw in trading yesterday. We started to rotate back to the downside. We came right down to that line. We then it looks like it found a little bit of better bounce, and then broke through that level with momentum, and the price has since come back down toward the 100-hour moving average. We're trading above and below that 100-hour moving average in early U.S. trading here today at 1.1344. That's going to be the key barometer for both buyers and sellers. If the price can stay above it, then we look toward that 61.8% retracement again at 1.1378 to give us more additional clues. If we break above that, it's more bullish. Conversely, if we stay below it, then or move below the 100-hour moving average with more momentum, we look toward the 50% retracement at 1.1318 as the next key target on the downside. Below that is the rising 200-hour moving average at 1.13842. So key level where we're at right now for the euro versus US dollar after moving lower in trading here today. The market's taking a breath right by that moving average. We'll see how it all plays out. From here, let's take a look at the dollar versus yen, and we're seeing the dollar versus yen base against this swing area right down here between 141.64 and 142.109. The market came down to the high of that level and found support buyers. Not only is that a level right through here more recently, but if I go to the 4-hour chart and I go all the way back, I'm going to have to watch this level right here, this area right through here, go all the way back to this period right through here. You can see where it all began. We had a low price going down to that, the low of that area, then came down to it here. We traded above and below it here, then reestablished support here and here against the level. Most of these against the low of this area at 141.64. The highs of that area is more defined right through here, where we had early buyers against the lows right here, and we held the support. So that's where it all comes from, folks. So pay attention to that level or this area, or that's why we found buyers against that level. The move to the upside is now taking the price away from that in a pretty determined fashion here. About 6 or 7 hours of straight buying here that's pushed the price all the way up to the 200-hour moving average and the 50% retracement of the move up from the April low to the May high that we saw through here. That area comes between 141.15, 144.157 and 144.257. So a 10-pip range right here, and we came down right up to the 200-hour moving average, and finding some willing sellers against that level. That's going to be the key barometer for traders going into today. If the price were to move above that level, then that would increase the bullish bias and have traders looking toward the 100 bar moving average on the 4-hour chart. If we get above that level, then we look back toward this broken 38.2% retracement. Conversely, if we do find willing sellers against this dual level, and we easily could, why? Because risk being defined and limited against that level, then we would look down toward the 200 bar moving average on the 4-hour chart, and then the swing area right through here, which goes back a little bit in time here as well to this high right here, and then the high. You see all the highs forming this ceiling through here, and then came down, tried to hold support against it, traded above and below it through here, but used that level as a resistance initially before basing against the moving average and pushing to the upside. Then in trading last week, did trade sloppily around it here as the market tried to figure out what it wanted to do. But we'll still keep that 143.57, 144.026 as a level too. If we go below it and break below the 100-hour moving average, that would open the door for further downside momentum. Finally, let's take a look at the sterling versus US dollar. And again, we'll look at the hourly chart to make our play here. Actually, we'll also look at the weekly chart, because the weekly chart, we broke above this swing area right going back in time through here. Now it's 100 pips, around 134.11 to 134.14 is where this swing area comes, but this is going all the way back to 2018 as well, and you can see a number of different swing lows and swing highs going back in time to this area right through here, here, forming this ceiling right here. We broke through the ceiling and then used that level of support through here and here before moving to the upside. Came back down to the floor, what was now the floor area, and then traded above and below, which you normally do, and got all messy through here before moving to the downside and away from that. Was in last month we came. Last year, I should say, we came up to the low of that swing area, found willing sellers, pushed all the way to the downside, and now we're pushing back all the way to the upside and extended above this whole area between at 134 or 135.14, and that's going to be a level of importance in trading today. 135.14. And as you can see, the price came down to a low price, it looks like, of 135.22. So we'll put a horizontal line of 135.14 right around there to remind us of that level going forward. And if the price were to move below that level, then we'd have this trend line coming into play. That is defined by these lows right through here. So a number of different lows on that, and followed by the rising 100-hour moving average. It comes at 134.88. So getting below the 135.14, getting below the trend line, getting below the 100-hour moving average is needed to shake the bullishness out of the sterling versus US dollar. Absent that, and right now we are finding support buyers against the 22 level, and the buyers are still in control. This is just a corrective move in what has been a bullish move for the pound versus US dollar. So there you have it. Look at three major currency pairs to kickstart your day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.